Sherry says, testing a previous level of structure. Cody says, coming off a pullback, now testing previous resistance. Raphael says, bullish. So you can see price action has spoked up. We created a previous level of structure resistance. Again, look left. We always want perspective of where we're at to see if there is room to go higher, if we do get that type of signal. We have retraced off of that level, came down, held our previous structure level, and now we're testing a previous level of resistance again. So this is going to be what I call a decision point, right? Because the market's going to make a decision at this level. There are two options. One, price is going to approach that level. It is going to get rejected at that level. It is going to hold at that level. And it will give you a counter trend signal, which would be a bearish signal. Two, welcome Daniel. You're not the only one. A few first timers in here today. I told the traders to be especially harsh with you guys. Two, we violate that level of structure. We get a higher high, higher close. Now, George, this is a good example of, we spoke about your breakout. We didn't get a chance to finish, but we spoke about your breakout trading plan on Monday in the Q&A session. And we talked about how, good concepts of what you want to do, but the plan needs to be kind of filled out. This would be a perfect example of, step one, identify that we're at a decision point, or identify a key level of structure, however you want to word it. Step two, and then use that if-then syntax, right? If price action breaks past that structure, and then insert the rules that you had for how you trade within the breakout candle. So it's just missing that little bit of perspective where in the version that you gave, we had no idea where you're at. Is it every bullish candle, every bearish candle? Does the location matter? So it's just adding that little bit of saying, hey, we have to be at this type of level for me to look for a breakout. Yep. And then you just insert the rules you already have into that situation. Yep. So yeah, be interesting to see what happens here. Let's go down to a lower time frame, 4-hour chart. Give us a nice clear picture. Hold on real quick. We may have for you guys looking at the Keltner ding, we may have a Keltner continuation setting up, which is very rare. Let me just bring this over real quick. If you guys are new, I've been testing out this new strategy called the DKC, double Keltner channel thing. This is one of the rare potential continuation setups where price action has retraced back to this inside small band. We've held. You can see inside bar right here, lower low, lower close in the bottom third without touching the band would be a bearish signal, or bearish entry, I would say. So we'll keep an eye on that. We got about 5 or 10 minutes for that. But doing a lot of eye testing on that thing. So 4-hour chart back on the pound dollar gives us a nice opportunity, or a nice look. So ideally, right, because this is my counter trend brain happening, what I would love to see is price not take its time. I would love to see, just like with New Zealand yen, I would love to see an explosive move right into that area. I want to see some buying pressure shoot up to that level. And then I would love to see a rejection, right? If you guys don't remember the Euro yen, or New Zealand yen, if you came in a little bit late, that was the one from this weekend's trading edge where we came down and had that beautiful 3-bar reversal. I would love to see something very similar to this. High momentum candle in the pound dollar case up into that level. Rejection candle, 3-bar reversal. If I had my wish in the markets, that would be it. Unfortunately, guys, the market can give a boop about what I think. It doesn't care. But I would love to see that. Because right now we have a nice shelf. Again, another VS1 level formed right in the middle of here. This gives me a nice shelf for target placement. If we can do that rejection, very comfortable taking a trade from 124.36s or wherever we go down to. Very comfortable going back down to the 123 even handle. Nice psychological number there. Nice opportunity. If we do something like this, where we kind of mosey on and create these little minor levels of support and resistance, right? Let's say we do like a rising channel. Guess what that does? Based on how I take targets, it screws me. It screws me. I can't take any. There's no clear structure level, and I'm a structure target taker, so that's important to me. There's no clear structure level to take targets at. So it eliminates my opportunity. So that's why I like seeing sharp, decisive directional moves, because it gives me a clear path for that retracement to happen. The VS1 is a visual structure indicator. So it gives us key levels of support, key levels of resistance. You can have single VS1s on there. You can have multiple VS1s on there. It was a really good strategy that when we first introduced the VS1, it was funny, just to kind of take you back. So we introduced the VS1. It was an in-house tool. It was just to kind of help with the eyes, right? All of the indicators that we develop are just kind of like support indicators, right? So we were not literally support, but supporting your trading, right, to make life easier. So I remember we unleashed it. We had a live like workshop. It was like a week-long workshop in Kansas. And we had a bunch of our mastermind traders there and whatnot, and we gave them this VS1, like, hey guys, just to say our thanks for being part of the program and blah blah blah. And like these geniuses, man, it was like it had to be like 10 of them in the back of the room, right? Not paying attention to me at all. Started messing around with these VS1s and like developed like this cool little strategy on the spot where they would take like this overlap. I forget the time durations, but just for an example. They would use a higher time frame VS1 and a lower time frame VS1 at the same time. So let's say this VS1 right here is based off of the daily chart, for example. They would also put in a VS1 based off of like the hourly, for example, and they would look for the overlap zones, and the overlap zones would be their levels to take. And it was just pretty cool how they just messed around with it together and that's the beauty. I mean, that's why we talk so much about community. And I was speaking to a trader the other day he's like, I need to get more involved in the chat. I'm like, yes, you do, because like, you don't underestimate the power of just like bouncing ideas around. Like, don't underestimate the power of just being like, hey George, like, you ever look at this candlestick? And George's like, yeah, I did. But you ever look like that? And he's like, oh, but look at it like that. And you're like, huh, wait a minute, because like solutions come up like in random conversation. Like when we're just being creative, that's when cool things come up. So. Always cool with the VS1s. Double VS1s was a really cool thing. But anyway, visual representation of major or key support and resistance levels. You can set them based on the time frame you choose. I have them set to the current time frame that we're on. So these represents the 4 hour. But if you wanted to, you can set them to the daily. So like as you're on your 4 hour chart, you can actually see where key levels of daily structure are at. Or you can set them to the weekly, or you can set them, however you choose to set them. You can have multiple ones on, doesn't matter. Basically whatever you want to use. So like if you're someone that is using a 4 hour as your entry for a daily time frame, it may be worth having the daily VS1s on there. That way you can see where the daily levels of support and resistance are, and then your entries down on the 4 hour. Or if you're using a 60-minute chart, you may have or if you're using a 15-minute chart, maybe you have a 15-minute VS1 on there for the current time frame, but then you also have a 60 on there, so you're seeing the overlaps for major and minor structure, something like that. But yeah, in short, they tell you where the structure levels are at. Nice little reminder in case you forget. I know they're, very helpful with me, because sometimes I won't see overlapping levels of structure, and I'll be let's say this example, maybe I don't see this higher level of structure. I'll be like, well, why is there a red box? Oh yeah, okay, we do have a higher level of structure. Let me make sure I get my stops above that. So just nice little reminders of key areas you should be paying attention to. But you can customize them to your liking, like everything. Play around in the sandbox. Yeah, long-winded version of the answer, Daniel. There's support and resistance levels. I get long-winded. But yeah, I would advise playing around with play around from in different ways. That kind of the double combo was pretty cool. But anyway, yeah. So nice counter trend opportunity if we can kind of go up there, and then again, vice versa, right? We spoke about the other thing. So this is a decision point. Let's say price rallies up to this level. Let's say we don't hold at 124.50s. Let's say we break and close above. Well, now the question is, all right, where's our next level of key structure that we need to pay attention to? Right? We looked at it on the higher time frame. I don't have enough data loaded up on here, but we'll go back to the trading view chart. And we're asking ourselves, where can price head to next? And if you remember on the daily, right, we had our horizontal, or this is the 4 hour, but on the daily, we had that other key level of structure right above here. This was our first level, right? This was our next consolidation zone. Now, obviously, I don't think, well, no, I shouldn't say obviously, but me personally, I don't think shooting for the very top of it is ideal, right? But you got some other cool levels in here, right here, or in there, right here, right? The zone before our elephant candle at about 124.80s. You got the highs of this consolidation level right here at about right below, what is that? Right below 126 even, so the 126 even handle number. We can bring some volume in as well and see if that plays a role. I'm just trying to see if there's anything else that I missed. Not really. Let me just see something real quick here. I don't think there's going to be any massive spikes in there. Let's see where our volume comes in. Sorry, guys, I'm bouncing all over the place here. Bouncing all over the place. Yeah, so we're pretty even all the way across the board here, from lows to highs. So no significant spikes or gaps. So yeah, I would say 126 even at the highest is where I'd be comfortable at. The top of that consolidation, your safest point is going to be about, again, 124.80s, 125 even, that area. Right? So we're starting to play out, we're starting to look at our trade and say, hey, is there opportunity here? Right? If I'm only thinking we can go to 125, is there a legitimate breakout opportunity for us to trade it? What would you guys say? And we did not get the Keltner signal. We did not get the Keltner signal. You can see. Got our lower low, lower close, but did we get a close in the bottom third? We did not. So no trade there. Yeah. So 125 for me, I can comfortably say that there's, if we're going to break out of this level, we're basically going to go right to 125. So for me, there's no breakout opportunity for me in the target level that I'm looking at. So what I do is this, right? If you think about my thought process before the trade, right? This is my energy bar of kind of what I can use for, brain space. Right, it's probably too big. I don't have that much brain space, but let me make myself feel good by saying that my brain space can take up this much, right? So this is my brain space. So I'm investing this much energy on looking for bullish opportunities, this much energy for looking for bearish opportunities. Now that I've gone through, don't laugh at my lack of brain space. Be nice. I like to consider myself smart-ish. You're still laughing, not nice. This is a safe space. We have new traders in here, and you're making. I just told them how you guys were nice, and they shouldn't be worried about asking dumb questions. And now you're teasing me. Leave, new traders. Leave. I lied. This community is toxic. Get out of here. But imagine pre-trade. Seriously, imagine pre-trade that when I'm going through this process, IPD, and this is the part of the this is why we want to go through the process, because we want to, in my opinion, filter out opportunities. Daniel's gone. We lost him. We lost him. We want to filter out opportunities because what happens as traders is we get overwhelmed. And let me know if this is correct, right? You look at a chart and you see bullish opportunities, you see bearish opportunities, and you're looking, oh, I can do all this, oh, I can do all that, right? Just like we spoke about earlier with the pattern inside the trend continuation, right? We're all over the place. I can buy this, I can sell doing that. And you go on the internet and like someone's talking about buying, you look at that opportunity, someone's talking about selling, you look at that opportunity, right? And you're all over the place. And you're kind of half investing in it in any one way. So this is why we have that IPDE process, identify, predict, decide, execute, because we want to lock in as much as we can on one side. So by doing all this in advance, right? And we don't even know that a breakout could happen, but doing kind of walking through this scenario in advance. This is the same thing we used to do in like, when I was a football player, football practice, right? We do walkthroughs. It's like, hey, Keel, what if the safety does that? What would you do? And it's like, oh, okay, boom, right? This repetition, this rehearsal is important. Because I've been able to do this rehearsal and I know that, okay, if we get a breakout opportunity, I'm only comfortable taking targets right here. I know this is pretty much pointless because if we break out, we're going to go to this level. If we don't go to this level, we're going to be so close to it that the risk reward wouldn't make sense. So what I can do is this. I am no longer interested in breakout opportunities because I just don't see any realistic opportunity of me getting involved. So now I can shift my focus to only and fully focusing on how would I handle the rejection, the counter trend trading opportunity. And now I can dig in fully on that and cross all my T's and dot all my I's. So that IPDE process is very, very, very important. Very, very, very important. It's something that I recommend everyone implements, and you can do it in different ways because everyone's IPD is going to be different depending on your trading style. But have that process. That way you don't get overwhelmed. So cool potential structure trading opportunity here on the pound dollar. I'm going to get this over to our chat and remember to put it in the pro trade log as well. Any questions before we take our first break?